Hey guys, what's up? PipSnipers here, back for another update. In today's analysis, we're going to be taking a look at the U.S. stock market. We're going to be first taking a look at the S&P 500, the Nasdaq, and then the Russell 2000. As you guys can see, we actually back-tested the 200-day moving average here. So this is the 200-day. I'll make it thicker so you guys can see. So today we backtested the 200. We actually came down, filled this gap very slightly, and then we bounced off the 200, and then we went up by a little bit over, let me see here, up almost 2.5%, a little bit over that actually. So it looks like we're going to have a continued move up. We would be targeting this supply zone over here at 6,016 and 6,116. I do expect a little bit of a kickback once we get there, maybe some consolidation, like once we get to around here. And then we're going to have continuation up to 63.86, 64.28, and 66.22. As you guys can see, this is the full wave count here on the S&P. I still do think that we haven't finished wave 5 yet. This was our wave 4 over here. You had a 3 down in your A, 3 up in your B, and then a 5-wave move to the downside for your C wave. Very similar price action to that of Bitcoin, right? And then this was your macro wave 4. Now we're going up for your wave 5 here. Okay, once we get over this supply zone, which we likely will, we may even form a little bit of an inverted head and shoulders, where this is your left shoulder, your right shoulder, and then your head. This is NQ over here. Okay, so as you guys can see, NQ is back above this support that we've used since November of 2023, or sorry, this resistance. This was support since November 2023. We dropped down below it, used it as resistance here, and now we're back above it. Okay, so we just had some deviation here, just down to these April 26 lows about 1 year ago. Okay, so now this is the full wave count here on the Nasdaq. I still do think that there's going to be one more wave to the upside. It actually reminds me, the structure reminds me a lot like Ethereum, like this, just this structure right here, like that, reminds me a lot like the current structure on ETH. But yeah, I think we're going to have one more push to the upside here for a wave 5 blow off top. I first think that the next point of interest would be sitting at 21,835 and 22,317 before we go up for that wave 5 to around 24,427 at 25,335. We could also come to this region here at 22,250 and 22,959. Okay. Let's take a look at the Russell 2000 over here. And Russell 2000 is looking pretty good. We actually formed that right shoulder like I said we were gonna form, right? You have your left shoulder, you have your head, and then your right shoulder. And then if we want to look at the measured or the minimum technical target of this inverted head and shoulders, we would just copy and paste this. And we actually do see a move back above the highs. So now what I'm thinking here on the Russell 2000 is that this over here was your ABC correction. We were just forming a huge base, just like ETH, right? For a explosive rally or expansion in the markets, right? So you have your ABC down in your A, your ABC up in your B, and then you have a 5-wave move to the downside within your C. And this would be what's called a running flat. So with a running flat, your C wave fails to terminate beyond the bottom of your A wave, and it just comes down very slightly. As you guys can see, we actually came down to the 78.6% fib. If we want to get a little bit more accurate, it came down to the 886 perfectly, actually, right here. Okay, at 1739. Now we're seeing a push up above the 50% fib. We actually gapped up today by about 2%, a little bit over 2%. So that's looking pretty good. So this would be your ABC. This would be your A. This would be your B, and then you have your C. And now we're going to go up for a continuation, likely above these highs, and then fulfill this inverted head and shoulders pattern over here. Okay, we would be taking a look at these targets. So around 3,000 at the 1.618. We can also take a look at the 1.702 and 1.786 extension. Okay, so 29 to 3,000 would be the next target. As you guys can see here, this was your 2020 C19 crash, right? This crash right here. This was your bottom, and then we went on a bull run with the altcoins. Or I should say the altcoins went on a bull run with the Russell. Then altcoins, along with the Russell 2000, they've been just going sideways for over 1,500 days, right? Even more than that, actually. More than 1,500 days. Some altcoins didn't have a full bull run back in 2020. They just went up to the retracements. But this is your leg, your explosive leg, your impulsive leg to the upside. You have consolidation, and then you have continuation. Very, very simple market dynamics, right? Bull run, pause in the markets, consolidation, over 1,500 days of reaccumulation, come down in an ABC correction in the form of a flat pattern. And you know what kicked off the run back here in 2020? That was the fear event, the C19 fear event. This is when all the smart money bought under this low, right? This is where they were buying, right here. And although there is so much fear in the markets and uncertainty, people, smart money use that as an opportunity. And what is the fear moment in 2025 to mark the end of the correction? That was the tariff war, right? With Trump and all of that. So yeah, over here back in 2020, it was C19, and over here, it was the tariff war. Okay, now this correction is done, and we're moving up and pushing up towards these fibs. We're actually above the 50% fib, approaching the 61.8% fib at 2133. So it's looking pretty good for the Russell 2000, Nasdaq, and the S&P 500. We'll also take a look at the Dow Jones Industrial Average, and the Dow Jones Industrial Average it's not as strong, but I do think we have a move back up to supply here, sitting at 43,730 and 45,98. Okay, I think we have a move up to supply, but yeah, we're finding a little resistance here at the 702. I think we see if we can take out the lows on May 20th, right over here at 42,546, then it's likely we're going to head up to the 786 at 43,523, in which we would want to see a reaction from here. We would want to see a reaction from here, either resistance, it'll act as resistance, or we'll have continuation up to the 886, which would also be your supply zone up here back in December and January. Okay. I also wanted to let you guys know that this is what's called equal high buy side liquidity. So you have equal highs here. So there's sell stops located. There's buy stops located above that level. Sorry, it would actually be sell stops. So traders who are shorting the market here, they're placing their stop loss above this level, right? Especially when you have equal highs, price is likely to be gravitated towards that. take it out, see a little retrace, and then you have continuation. Or we just simply come up to the retracements in the supply zone and stall out, okay? And then this is the DXY. It's looking pretty good still. Okay, so I want to show you guys this DXY chart that I made here. I think I put it on this layout. Let me just check here. Okay, I think this is it right here. Yeah, this is it. So let me just make the chart black so I can show you. Okay, so you have your 5-wave move down here from September 29th, 2022 down to January 31st, 2023. Then you have a pause in the markets. This is what's called Wyckoff redistribution. We perfectly called the bottom here, and we said it was going to come up to the 618 up to the 702, and then see a 5-wave decline, right? And we perfectly got that. We've been calling all these moves up and down on the DXY, and they've been perfectly playing out. So this is Wyckoff redistribution in the form of a flat pattern, 3 up in your A, 3 down in your B, and then a 5 up within your C wave for your distribution. Then you have continuation down towards these fibs measured from the December 2020 lows up to the September 2022 highs. So let's drop down here to the 4-hour time frame and remove all of these drawings here. And this is the wave count. We're just coming back up to tap the 21-day. We're above the 21 period on the 4-hour. Okay, yeah, so we're coming back up to top the 50 period on the 4-hour and the 21-day, which is right over here. But overall, the trend is down, and we're currently within wave 5 of C of your macro B. Right, so we'll probably come down to around 94 and 93 bucks, 95 to 93 bucks, around this region. Okay, around this region. Then we may form some Wyckoff reaccumulation, and then you have your reversal or a rounded bottom. Now, what do I mean by wave C of B? Well, if we go ahead and take a look at this on the weekly time frame, we can see that just after the subprime crisis, or during it, we started our wave 1 on the DXY in the form of an ascending channel, and we've been subdividing into 3s ever since. So it looks like this was your A wave from 2021 to 2022. We're completing our wave C of our B wave, right? Which will come down to around 95 to 93. Then we'll probably form a rounded bottom or a Wyckoff reaccumulation range. It may even be a V-shaped recovery, right? Then we would come up for a C to make a new all-time high and to fulfill the upper bounds of this macro ascending channel, which we've been in for over 12 years now. So yeah, this is the DXY and the stock market update. Hope you guys enjoyed the video. If you like the content, please like, share, subscribe, comment. And if you really love the content, then click the link in the description below to join the Discord, where you can get access to over 350 assets You guys can ask me any question you want and connect with me one-on-one. Peace out. Take it easy. See you in the next one.